I think your mic was still in mute.
Sorry, some network issue. Can you hear me now?
Yes, I can hear you now. Please go ahead.
Okay. Good afternoon, everyone. I am Iris Gao from DBS China Securities and Fiduciary Services, and our team is responsible to make sure foreign investors like yourselves can access the capital markets in China through programs like CIBM and QFI. DBS is highly committed to China as a core market. We are one of the first foreign banks to incorporate in China since May 2007, with more than 15 years of operational track record. And we are the only foreign bank approved and licensed as Futures Depository Margin Bank by INE, the Shanghai International Energy Exchange. We also established a majority-owned securities joint venture with registered capital of renminbi 1.5 billion in China, further deepening our commitment to the Chinese capital market. As a rising custodian in China, we are heavily involved in local custody industry, and our professional English-speaking staff are well-versed in domestic and international banking standards to offer you the most comprehensive one-stop solutions. DBS China is also the first among all foreign banks in terms of award quality and quantity. So on this slide, we list some awards we won in recent years for your reference. Why you should choose DBS China Securities Service? With the unwavering commitment to China, we always drive the innovation in industry. And we are the advocate for proactive dialogue with regulators on improving meaningful market access for our clients. Next, I will give you an overview on how you can access China capital market through DBS. I'll cover the access and the process. First, let's look at the history of China capital markets. QFI, the Qualified Foreign Institutional Investor Program, was launched in 2002 to allow foreign investor entry into China onshore market. Subsequently, more channels such as CIBM, the China Interbank Bond Market, RQFI, Renminbi QFI, Shanghai Shenzhen Hong Kong Stock Connect, Bond Connect, international futures contracts were introduced as the country opens up and allows more participation from foreign investors. The latest development is in September 2020, where QFI and RQFI programs are unified through the new QFI RQFI. Unified through the new QFI RQFI regulation. Entry thresholds are lowered, investment scope is expanded, and quotas are removed. Today, the Unified QFI program is the most comprehensive access channel to mainland China. Let's dive straight into QFI's latest developments and how DBS can be your partner in this journey. The fundamental question is, which channel or access should you as a foreign investor consider? Traditionally, Shanghai Hong Kong Connect and Shenzhen Hong Kong Connect is a common route. However, with the Unified QFI, there are 3 points I would like to highlight on this slide why you should choose QFI. First, the Unified QFI is more flexible than Stock Connect and Bond Connect. Both Stock Connect and Bond Connect is subject to quota, while Unified QFI is not restricted by any quota. This is important when you consider the liquidity of your investments, the ease of accumulation or liquidation of your positions. Second, compared to Stock Connect, Bond Connect, the Unified QFI has wider investment scope. We will go through the details later on. Third, under the Unified QFI channel, foreign investors could access block trade, proxy voting, and IPO. Here, I'd like to highlight the IPO part. As we all know, many foreign investors are quite interested in participating in the mainland China IPO. Another advantage for the QFI scheme is there will be approximately 10 more trading days than Stock Connect, which is very important for index tracking fund manager. Many foreign investors, as we know, they should ensure the full accessibility to market during the volatile period. Besides, on the invest protection-wise, QFI investors are protected by China Securities Investor Protection Fund, while Stock Connect transactions will not be covered by the Investor Compensation Fund in Hong Kong, nor the China Securities Investor Protection Fund. For another, you could trade Stock Connect through DBS Hong Kong. As far as we know, some foreign institutional investors prefer Stock Connect still because its trading, clearing, and settlement infrastructure is more similar to international practice. After hearing the why, let me quickly give you an overview of the key changes to the Unified QFI. The main changes are consolidating QFI and RQFI measures and provisions, and relaxation on applicant qualification requirements, and simplify application process. Another is expanding investment scope. Also, remove the restriction on number of custodian banks, brokers, futures brokers can be appointed by the single QFI. And the last one is enhancing ongoing supervision. Next up is a breakdown of the expanded investment scope under the Unified QFI scheme. On this slide, we could find the newly added investment marked in red. Under equities, the QFI investors could trade CDRs and they could do securities financing, margin trading, and securities lending, and also the options listed on the stock exchanges. Do note for options, the concerning exchanges will seek CSRC approval separately before it can be made available. Furthermore, QFI investors could trade shares on NEEQ, the National Equity Exchange and Quotation as well. Fund-wise, besides open-ended mutual funds, money market funds, QFI investors could trade private investment funds with underlying investments within the QFI investment scope. Fixed income-wise, QFI investors could trade bond repo as well. Here, please do note for bond repo, the concerning exchanges will need to seek approval from CSRC separately before it can be made available to QFI. Lastly, index futures are available and QFI investors can expect more financial futures and options listed on CFAX, and commodity futures and options listed on China Commodity Futures Exchanges, i.e. SHFE, the Shanghai Futures Exchange, including INE, BCE. BCE is Dalian Commodity Exchanges, ZCE, Zhenzhou Commodity Exchange. This will be an exciting space to watch as we all await for CSRC to approve commodity futures and more financial futures to be made available for QFI on the various exchanges. Here, I made a comparison table for you to learn more details about the difference between old QFI or QFI and the Unified QFI. Under the old QFI scheme, the applicant shall meet various eligibility criteria. For example, the asset manager, insurers should have at least an AUM of USD 500 million. The securities companies shall have at least AUM of USD 5 billion and net capital of USD 500 million. And for the commercial banks, they shall have at least an AUM of USD 5 billion and a Tier 1 capital of USD 300 million. Under the Unified QFI scheme, such criteria was removed. Thus, more and more applicants could participate in China onshore capital markets through QFI. For another, under the old QFI scheme, the applicant should only come from 19 markets, which is quite limited. But with the Unified QFI, such restriction has been totally removed. Next, we'd like to highlight that under the Unified QFI scheme, the limit on number of appointed QFI custodian bank is removed. The QFI could invest as many QFI custodians as they like, and of all the QFI custodians, QFI show up.
没有，就他有问题。
Could
有问题的就是他。
Sorry, Iris, please help mute.
对，号码发你了。
Let me just.
Hello, Iris.
Let's continue. Under the Unified QFI, the QFI could appoint as many QFI custodians as they like. And of all the QFI custodian bank, the QFI shall appoint one master reporting bank. Another change we want to highlight is that the investment quota management has been totally removed. So the QFI could invest as much as they would like. Last change we want to highlight is that under the Unified QFI, the QFI investor has the obligation to inform the master reporting bank of their respective FX derivatives position with different FX counterparties or the total amount of their FX derivatives positions. The master reporting bank shall assist supervising the QFI's total onshore FX derivatives positions to ensure the compliance of the principle of the trading on actual needs. Under the latest Unified QFI scheme, the application process is also further streamlined. CSRC has committed to a shorter review period of 10 working days to decide whether to grant a QFI license. Please note previously it's 20 working days for QFI and 60 for RQFI. Application documents are much reduced as well. Instead of submitting a total of 13 documents, the applicants now only need to submit 7 documents only. And our team is able to guide you on your QFI application documentation preparation. We also assist the QFI to do the registration with SAFE, helping them open the QFI accounts so that they could start the QFI investment smoothly. Next is an overview of the implementation process for QFI, where DBS China is appointed the custodian. And on behalf of you, we will liaise with the various authorities within China. Based on our experience, the whole implementation process will take about 8 to 10 weeks. Step 1, appoint DBS as your QFI custodian. Step 2 will be to applying QFI license with CSRC. Step 3 being the registration with SAFE. Depending on what investments QFI investors will trade, we have listed 4 implementation scenarios on the right. For example, scenario 4 is for those QFI investors would like to invest in futures. They shall appoint local futures brokers while opening QFI cash accounts, including the renminbi basic account, which require PBOC to approve. Then open trading ID with concerning local futures exchanges through the brokers. And the final step before they could start futures trading is to link their QFI cash account with their margin account with the local brokers. Here, I would like to highlight that for the cash account opening with DBS China, DBS Singapore could be leveraged in 2 ways. For one thing, as in-person witness is required, DBS Singapore staff could well support this. For another, some KYC CDD documents could be directly shared to DBS China if the QFI client is the existing client of DBS Singapore. No need for client to resubmit the duplicate documents, which is much more efficient. Next slide, let's take a closer look at the closed loop circuit for margin transfer for futures trading. In China, all futures related cash settlement are within a closed loop circuit. Step 1, after the QFI client funds cash margin for futures trading, the margin will be transferred from client's cash account to their onshore future broker's dedicated account. Next, step 2 will be the onshore local futures broker will transfer the trading margin to the onshore futures exchange so that the client could start futures trading or to top up their daily loss from daily settlement. On the reverse, step 3, the onshore futures exchange could transfer profit from daily settlement to onshore futures broker so that the broker in step 4 will transfer the profit to client's cash account. In the end, the QFI client could repatriate the principal and or the profit to their offshore account under the same name. Next slide is about the account structure under the Unified QFI. On top of the renminbi basic accounts, the renminbi basic account is opened for license holder only due to the local regulatory requirement. The other QFI accounts used for renminbi injection should be strictly segregated from the accounts used for foreign currency injection. Here we would like to highlight that no fund transfer is allowed between these 2 sets of cash accounts. By the way, the purpose is to avoid QFI investor to do arbitrage on the difference between the FX rates for onshore renminbi and offshore renminbi. Thanks for your listening. And we will be more than happy to be your QFI custodian when you embark your QFI journey. And you could find our team's contacts in this slide. Look forward to hear from you. My part is over. Xiaoyu.
Thank you, Iris, for your sharing. And I apologize for the interruption. I truly did. And we all know that DBS is quite active recent years in QFI custodian area. And I look forward to have a lot more cooperation with you guys in the near future, okay? Thank you very much once again.
Sure. Thank you very much, Xiaoyu. Thank you.